Welcome back to Instables, everyone. So again, going over my daily plan on exactly how I plan on playing into the SPY. Again, dropping below our 20 yesterday. Now coming out with the doji candle. Where exactly are we headed next? Are we going to continue on lower to the upper end of our 50-day moving average here? Possibly look for a bounce from here. Will we continue on higher from here? I'm going to go over exactly what we're looking for.
Now, before I jump into this, you guys can do me a huge favor. Smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again.
So jumping into the daily chart with you guys here on the SPY, again, very much trading within smaller ranges today, very indecisive moves today as we had a doji candle coming out today. Again, looking at our MACD, this is our strength, as you guys can see, following through with an increase in sell pressure, looking for a white shaded line to possibly decrease in sell pressure if we're going to try to continue on higher. One thing that we do like is that our EMA lines are still above the median of our MACD. We are not dropping below the median of our MACD quite yet. So one thing that we do have going for us is that we still have a capability of crossing higher here for that possible continuation. So we're going to be looking to see if we do get that possible decrease in sell pressure coming in leading into next week. Again, next week we have CPI on Tuesday. Powell will be speaking at our next Fed rate hike the day after on Wednesday. So again, we have huge data coming in next week. We're going to have indecisive moves leading into next week. So again, very much getting that indecisive candle coming out today. So the number one indicator that we have been tracking is the dollar. Again, when we get weakness on the dollar, we get strength in the market, as you guys can see, getting a slight rejection on the lower end of our 20-day moving average today, giving us a small amount of strength today, however, very much indecisive as well. Looking to see if we will continue to bounce here on the dollar or if we will continue on lower here. Again, looking for that possible bearish candle structure. We want to see a continuation on lower here. We want to see maybe some type of a pullback and then a continuation on lower below our 104 support level to show that we are giving us strength in the market. Again, we are sitting on a bounce. We do not want a continuation on this bounce. However, as you guys can see, we have our EMA lines now crossing on our MACD here, showing us that we have strength here on the dollar. So again, being very careful on the SPY, because if we continue on with this bounce, then we will continue on lower on the SPY. So again, keeping an eye on the dollar is very key. Again, getting a cool down on the SPY, as the dollar has been on quite the sell-off and now on a strong bounce at support. So tracking our fibs here, as you guys can see, again, jumping into our next fib that we have been tracking here at 0.618. Again, that is our 386 level. That is exactly here on our 50-day moving average. So again, that is our target if we are going to be looking for a possible bounce. Again, there's not much room to run to the downside here, and very much going to make a bigger move leading into next week with CPI and Fed rate hikes. So again, in my opinion, playing to the downside at this point is probably higher risk, and even playing to the upside at this point is looking for more proof of concept. Again, looking for that proof of concept on the upper end of our channel here, as we have been getting multiple rejections on the upper end of our channel here. So again, looking for that proof of concept on the upper end of our channel is exactly what we're looking for here if we're going to continue on higher. At this point in time, again, we are still increasing in sell pressure, sitting on a pullback. We need to make sure we are careful playing to the upside still. Clearly, bulls coming in today and giving us rejections to the upside just below our 20. So leading into tomorrow, again, we do have pressure to the downside. We are not playing to the upside quite yet. We don't have any bullish candle structure. We are still below our 20. Again, we had bulls coming in today getting that rejection. So we're very much on watch this week to see exactly how we hold leading into CPI and Fed rate hikes next week. Again, as our 20 is still holding above our 50 like this, we are still looking for that possible bullish candle structure to come back through, so that way we can get that continuation and possibly get that bullish candle structure on the upper end of our channel. That is what we're looking for. We are not necessarily too heavy to the downside quite yet. We don't have our 20 curling over yet. We don't have any bearish data that came in yet. We have initial jobless claims coming in tomorrow, 1 hour before market open, and then we have even more important, which is a inflation report with PPI coming out on Friday, 1 hour before market open as well. Again, we need to be careful leading into tomorrow's jobs report. Again, non-farm payrolls give us a pullback. We did bounce back from that again on Friday, and now we are looking to see if we will have a possible pullback with data coming out tomorrow and Friday, and then most importantly next week with CPI and Fed rate hikes. We'll see exactly what happens. Data will carry the market from here. again, just keep that in mind. From here is that data will carry the weight. So again, just staying cautious here. Now, again, with that said, if you are a day trader, if you're looking for very volatile breakouts, I know the market has been very choppy. Most breakouts have been pre-market news into open. We mentioned pre-market news 2.5 hours before market open. Any breakout that is worth looking at throughout the day, go to instables.com in the description below. And only for $15 a month, you guys will never miss a breakout alert today again. And all of you Instables, I appreciate you guys again. Lost my voice again today, apparently. So I appreciate you guys again for supporting. Hope you guys did have a blessed day today. Today was pretty choppy, but very much looking for what move we're going to have with CPI and Fed rate hikes next week. We'll see exactly what happens with initial jobless claims coming in tomorrow. And then we have our PPI that's going to come in on Friday. So again, keeping that in mind, we'll see exactly what happens. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.